Well, welcome, welcome. Hello, Baton Rouge. We're very excited to have this series starting and kicking off tonight, sponsored by Hancock Whitney. My name is Angie Juzang, and I am the co-founder of Legacy Business League. It is an organization that started really in 2013, but formalized over the last couple of years to help entrepreneurs in many different ways. And our goal is to support minority individuals and businesses, and also to bring different information like this. We've hosted some things with Hancock Whitney before, some nonprofit grant writing, and now housing and financial empowerment series, and we're very excited to support and to facilitate these meetings. You may or may not know we're having this is one of three this week. We're doing it in this area, and then tomorrow in Gulfport, and then the next day in Tampa, Florida. And the series is kicked off with today. We're going to talk about your mortgage loan process, but please make sure that you go back to some of the resources where you found out about this information, because in session 2, we're going to have the topics of discussion will be credit management, budgeting, and financial health. And in session 3, the topic of discussion will be mortgage loan resources. And I'm sure Ms. Babers is going to tell us a little bit more about all of that. So we have a fantastic panelist today and a wonderful guest speaker. I'm going to point out the Hancock Whitney partners and supporters, Ms. LaCarsha Babers, and she is the Assistant Vice President, Community Outreach Officer. You'll hear from her first in just a little bit. Ms. Diatro Carey, and Ms. Diatro is a community lending specialist, and she is going to review the 3 phases of the process and get you a little bit more in tune to what to expect. And then we have Ms. Ashley Harrison. Ashley's not on camera yet, so I'll have to figure that out while Ms. Raina, who we'll talk about in a second, how we can get her on camera, but she's the Vice President and CAR Officer. And she's going to talk a little bit about the who's who in the mortgage process. Some of you who are on may or may not have ever owned a home. You might, if you've never owned a home, it is very daunting, and we all understand that. And you don't even know where to begin, like how do you even start? And today, I hope that you walk away with, kind of a playbook on what to do. If you've owned a home and just need a refresher, like I bought mine 17 years ago, and I'm in the market again, I don't know where to begin again, because you just, it's one of those things. If you're not doing it often, you don't know who to trust. You don't know what finances you need. You don't know what questions to ask. And that's what we're here for. So, and then of course, Ms. Raina Winfield, I would love for her to tell us a little bit about herself when we get to her, but she's a community partner that is our special guest, and she's the program manager of Home Ownership HUD Certified Counselor of Mid-City Redevelopment. And so she's going to tell us a little bit about what all that is and how to get in touch with her for more information. So we're going to kick it off with Ms. Babers, and she's going to welcome us and just tell us a little bit more about what to expect.
Awesome. Thank you so much, Angie. I really love working with Angie, the Legacy Business League. She's facilitating this event for us, as well as tomorrow night and on Thursday. Well, good evening, everyone. Thank you all for joining us. This is the Housing and Empowerment Financial Empowerment Series. It's a 3-part series. Special thanks to our partners again, Legacy Business League, as well as the Mid-City Redevelopment. As Angie mentioned, I'm LaCarsha Babers, and I'm the Community Outreach Officer for Hancock Whitney Bank, where we have over 200 financial centers conveniently located across 5 states, and they're all conveniently located to help meet the credit needs of the communities we serve. We have Alabama, Florida, Mississippi, Louisiana, and Texas. Our mission here at Hancock Whitney Bank is to help people achieve their financial goals and dreams. And one of the ways in which we do that is by providing access to home ownership. So that's why everyone is here on this evening. We know that purchasing a home for the first time, it can be a little bit overwhelming, like Angie mentioned. So we've gathered some community partners to provide for you a 90-minute information or guidance session, providing guidance, resources, as well as expertise on the mortgage loan process. Tonight actually begins the first part of the 3-part series. In session 1, we'll be talking about, as Angie mentioned, your mortgage loan process. We're going to have our experts, HUD certified counselor, to talk us through that process. She'll also give us some advantages as well as disadvantages of owning a home. Session 2 will come back in the month of May, and we'll talk about credit management, budgeting, as well as financial health. And then in session 3, which is also home ownership month, in the month of June, we're going to go through and take a deep dive of the mortgage loan process, where we'll talk about the down payment and closing cost assistance opportunities as well. Again, my name is Lacarsha Babers, Community Outreach Officer. So grateful that each of you are here. And at this time, I'm going to turn it back over to Angie so that we'll have plenty of time to hear from all of our guest speakers on today.
Fantastic. Now, if you can keep up with Lacarsha and myself, because we're probably the fastest talkers in the whole world, you know, so if y'all keep up with us, y'all are good. So I love to hear you talk about this, because you're so passionate about it. I'm letting some other folks in. I've allowed everyone to talk. As a reminder, please keep it on mute though until you're ready, and until we stop after each section to ask you if you have any questions. Really the best thing to do is to put it in the Q&A. I'm watching the chat, but the Q&A or chat if you have some questions as they go along. As we get to each section, we're going to allow each person just to introduce themselves and tell them a little bit about themselves rather than going through introductions one by one. We do have a PowerPoint that we are going to kind of allow it to guide us, which I'm going to go ahead and pull up right now. But I'm going to, as I'm doing that, I would love for Ms. Raina Winfield to go ahead and tell us a little bit about herself.
Okay, good evening, everyone. Again, my name is Raina Winfield. I am a HUD-approved housing counselor at Mid-City Redevelopment Alliance in Baton Rouge, Louisiana. Also a program manager for homeownership. Basically, I've been at Mid-City Redevelopment Alliance for 11 years now. So I've really been in the home buying process for a while to get to, you know, see the ins and the outs and the changes that's going on today in the housing market. So today what we're going to do is just basically we're going to go over some small pointers on advantages and disadvantages in owning a home, and also just, you know, what's the process of purchasing a home, what's that home buying process and how does it look, or even if you're ready to purchase a home. Once you get into this process, you may be you know, kind of frightened and say, well, look, I'm not really ready to purchase a home. But today we're going to be here just to kind of get you acclimated with purchasing a home and going through the process and kind of, you know, just steering away from those barriers that people talk about and to frighten you a little bit. So we're going to kind of relax and just, you know, learn a little bit more about the process. So some advantages of owning a home is building equity and borrowing against it. So what you want to do is basically when you purchase your home, just start making those payments, building that equity, and then you can even take out a loan against your home on the equity side. So you won't have to go out and get a personal loan anywhere else because you're building equity in your home. It's also just a good investment overall. You can do tax deductible mortgage interest. On your tax returns, you can allow your tax returns, you may get some returns back on your mortgage interest, and also assets you can pass on to your family members, just to build wealth in family, because sometimes owning a home and passing it down could be a way that you build wealth in your family, also with insurance. So there's different ways, and this is a good way to start a legacy in your family and also how to build those assets. Also, there's some disadvantages as well. Property maintenance and upkeep. Those things are going to happen. It can be your air conditioning, it can be your roof. Those things can happen. And that's what's so important about budgeting on a monthly basis. When you go to purchase your home, the banks, they really don't look at what's your monthly budget. They only look at what's on your credit. So knowing how to budget and save is going to be key to purchasing a home as well. So it can be a disadvantage if you're not, you know, able to save on a monthly basis or have that nest egg where you can go in and keep your property up. Also, it's not as easy to move as renting. So say you're like, well, I think it's time for me to move. It's easier to move if you're renting and get out of a lease than a mortgage. So that's one of the disadvantages as well. Risk of losing your home. So if you get behind on your mortgage, I tell everyone, Call your lender, call your service, and let them know what's going on. Communicate, communicate, communicate. Is that something that you're going through? Make sure that you communicate that with your lender or your servicer. All right, so as I said, you may be ready, you may not be ready. So this is a good way to know if I'm ready to purchase a home. Is this something that I'm ready to do right now? So the first thing you want to do is know if you have a steady source of income. I have a lot of clients that come in and we sit down and we discuss the finances, we discuss the credit, and they don't know the income. Like they don't know exactly how much they make. And that's mind blowing to me because that's the first thing I want to know. How much am I going to make at this job? So you want to make sure you have a steady source of income, a good credit history. And when I say a good credit history, I mean a good credit history, not just, okay, we're going to go to a credit repair and we're going to do this and try to do the shortcuts. We want to make sure we have a good credit history, something that the banks will be like, okay, I can loan her $100,000 because she pays her bills on time. Like I discussed, when we're sitting down, we're doing a budget, you want to make sure you're able to pay those debts. You're able to pay your mortgage and your other additional expenses, such as your lights, your water, things that you pay, your car note. You want to make sure that you're comfortable with those things and also able to still enjoy life. So you don't want to have it where you're struggling to make the payment because you went and you spent your maximum cap that they told you can spend for $250 on a house when you can only afford $150. So we want to make sure we're able to pay these debts and your additional costs as well. Make sure you're ready to plan to move to within 2 to 3 years. So if you're starting the process, just make sure that you're ready to move. You don't want to wait to the last minute to try to save and things of that nature. You want to make sure that you're wanting and ready to move at this point. Money for down payment and closing costs. There's a lot of additional resources for down payment and closing costs. We're going to discuss that a little bit later, but there's a lot of assistance that you can to get to help you with those down payments and closing costs. And a lot of individuals don't know what's the difference between down payment and closing costs. And we're going to get into that. I don't want to get into the weeds too much, but there's a difference. And so we want to know what's part of that down payment, what's part of that closing cost, and what, how much do I need to put into my home buying process. Next slide. And so the 5 steps to buying a home. Number 1, determine your readiness to buy a house. So we just went over those things to, just kind of get you ready. And am I ready? Am I ready? So that first thing is just determining your readiness. Knowing, are you able, are you ready to purchase a home right now? Determine how much mortgage you can afford. So what's going to happen is your mortgage or your lender, they're going to determine if, how you can afford a home. They're going to have different ratios to help you, determine is this affordable for you. And then you'll put in, knowing that budgeting piece, you'll be able to put in and say, oh, okay, well, she said I can afford this, but I know I have these. So now I can afford this. So determine which mortgage option is best for you. So your lender or your mortgage company, they're going to, kind of tell you some options, give you some options on what mortgage would be best for you. There's FDA, there's RD, there's conventional, it's products for different people. So it's based on your situation. So your mortgage company or your lender they'll get some information from you to know which one would be best for you. Qualify for a loan. As we stated, you'll have to send in some documents, get ready to purchase the home, and then make sure you qualify for a loan before you move forward with your process. So you'll know that as well and go through settlement, which is closing. You get your keys and then you're ready to move forward. We just want to make sure this is something that I'm ready to do, something that I want to do, and I want to educate myself on this process. So that's your process from the beginning of knowing your finances and knowing your credit and how to move forward.
I'm trying to get back on camera, but y'all can see I'm having technical difficulties.
That's right.
I keep because I do have some questions for you.
Okay.
If I can get back on camera, but you can hear my voice. Here we go. Great. Thank you so much. Those are some fundamental things that we absolutely needed to know. I like to facilitate these things as if I'm hearing it for the first time, and wanted to ask you some things that, if I'd never been through the home buying process, this is what my first thoughts. When you
Right.
talked about owning a home and, the advantages and disadvantages, talk a little bit about, why one would want to own a home. Like, why wouldn't one want to rent for the rest of their lives? Is there a liability, because a home is really a liability before, until it's paid off, and then it's an asset.
Right.
So why wouldn't I just want to rent for the rest of my life?
So this is how, this is how I would look at it. And then I would explain it to someone that, in the renting, and they're like, well, I don't really want to do the upkeep. I really don't want to do this. But anyway it goes, you're paying somebody a mortgage anyway. You're paying a mortgage anyway. If it's rent, if it's, a lease, somebody is owning that property. So you're paying into it anyway. So why not pay into something that eventually is going to become asset? Eventually you can, pass it down to generations to come, and just have it in your family. Or if you don't even have a family, some people say, well, I don't have kids. Like me, I don't have kids. So, but I do have brothers, and my mom is still here. So that's something that they can pass down. If something happens to me, they'll be able to take over it and, and rent it, and be able to generate income from it. So it's different avenues you can take. And it may be right now that you don't want to do that. Some older people, they don't like to cut grass. They don't like to do this. So they don't like the upkeep. So it may be a liability at first, but I would look at it in the long run. Okay, when I'm not here, this is something still here, a legacy for my family, or just to pass on to somebody to help them move forward in life. And that's how I look at it.
I like the long term. Okay.
Right.
And then when you talked about the readiness to buy a house, and you talked about having good credit, what if you don't? Number one, or
Right.
what if you don't have any credit?
Right.
Because, there's young people who are, buying homes now, want to buy homes now. What are the alternatives there?
So so people always say that no credit is bad credit because you don't have that history. So what you do when you come to a housing counseling agency like Mid City, what we do, the first step is just, like I said, go through your finances and your credit. So we'll do an action plan. We'll develop an action plan with that individual. They may come in and say, well, look, I don't have anything. I want to start my credit. How can I do that? So what we do is sit down, look at the plan as a whole, see where you are as far as your finances and what you can do to kind of build your credit. So we'll not really offer you, but kind of give you options on what you can do to get your credit to where it needs to be. It may be just a secure credit card, a secured loan, kind of educate you on that process. So that's the good thing. And that's the best way to do is just go through a first-time home buyer education class to learn those pieces. Because a lot of people don't know that. They don't know that, I can get a credit. All I can have is one credit card. I can have one credit card and one loan, and I can build my credit. I don't have to have 10 credit cards.
Okay.
So it's not something that's complex if you educate yourself on the process.
And I do have some questions from the audience, and so I'll ask you those in just a second. But I want you to go ahead and tell us a little bit more about the services that you provide, because that was great to know that that you help with the action planning, and it may take a little bit of time. People may not walk through the door ready, but you can help them, guide them, and then 6 months, a year, 2 years, it's worth it.
Yeah, and there's different tracks. So when you may come in the door, you may not have any credit, you may not be ready to purchase, so you just want to do financial capability. You may just want to learn about your finances, learn about a little bit more about credit, but you don't want to purchase a home. So when you're in that financial capability process, you may say, oh, okay, well, I can purchase a home. So then you go through that home buying track. So there's financial capabilities that we offer, meaning that it's just like financial literacy. And then we have that home buying process where you come in, you do your intake, you go through your one-on-one counseling session, you go through class, you develop an action plan, you may have homework. It may take you 6 months to a year to 2 years. I have clients that, it takes them a while because life happens. So you want to make sure that, you're ready for when life happens, that you can get back on track. And so I don't have like an expiration date of when I can, see a client or how long it is that I have to deal with the client. So that's the beauty of it. You can always jump back in. We also, and I didn't, it's a service, but we also have foreclosure prevention. So we have some clients that it's really, really right now, it's like it's a lot. It's a big increase in that number because during COVID, a lot of individuals got behind on their home, on their mortgages, and they just need some help. So we have those services as well to get you back on track. They have some things going on with the state that you may qualify for. So we have that track as well. So if you fall behind, you can always get back on track. And so we offer those services as well. And there's a lot of things that we offer in-house. We do developments, and things like that. So we develop housing. So you may have, I may have a client that come in the door and they may only qualify for 90,000 to 100,000 or something like that. So we also try to develop those homes that's affordable, for that market, and rehab as well. So we have that rehab option too, where you may find a home that is not really up to par, but you can also do a rehab on it as well.
Nice.
So those are some of the services that we provide at Music.
Excellent. Okay. Well, we did have one person say, my credit is bad. Do you all provide a class to help restore credit? But I believe you answered that you do, right?
Right.
Okay. Okay. So I hope that helps. So we do have another question. Tell me what CRA is. I'm having a question about something about CRA. What is MCRA? And then I know
MCRA. What is MCRA?
Yeah, what is MCRA? And then I think Miss Ashley, she had CRA behind hers too. What is CRA? What is that?
So ours is Mid-City Redevelopment Alliance.
Okay. Oh gosh, that's what. Okay, but so what CRA must mean something else then. That it just had that happened to be a coincidence. Okay, Miss Ashley, what is that?
Sure. So the Community Reinvestment Act is a regulation that requires that all financial institutions provide access to credit across all communities that they serve, including those communities that are low to moderate income.
Okay, excellent. Because the
Right.
question is this: what amount are you guys willing to make qualified investments in community development organizations in your assessment areas as per your most recent CRA?
Yes. And so I spoke with that individual and told them to definitely contact us
Okay.
offline. Yeah.
Excellent.
Oh,
Perfect.
yeah.
Perfect. Okay. So what we're going to do now is, and I'm going to hold this question for the Hoff Counseling Agency, because it's also asking about qualified investments in organizations and some other
And
areas.
so Angie, those are things that we discuss with our individual partners. We have meetings with various community organizations such as Mid-City across our footprint, not so much about the mortgage process.
Okay, excellent. Okay, so what we're going to do is we're going to continue on. Thank you so much. Is there anything else that you want to tell us about your organization or your partnership with Hancock Whitney?
That's it. I think I don't know if they're gonna do my information at the end as far as how to get in contact with us. Is that something that
That I would love for you to
put in the chat?
Go ahead,
Okay.
put it in the chat, and then we'll make sure that we say that again.
Okay, now I'll do that.
But stick around, because we definitely want to make sure that
Right.
you're available to answer any questions. Okay, so now we're going to go on to Miss Ashley. She can stay on camera, and then you're going to tell us a little bit about the who's who in the mortgage process. I love this part because I still don't know the difference between all this. So I'm going to go ahead and advance this slide.
Definitely. So let me first start by introducing myself. My name is Ashley Harrison. I am the corporate CRA officer for Hancock Whitney Bank. And what that basically means is that I get to be both an advocate for the community, as well as serving as a bit of someone who makes sure that we have all the products and services that are needed to better assist all communities across income, demographics, as well as racial demographics. So, in talking about the mortgage process, one thing I'll say, and I'm sure Raina touched on this a bit, is when you're purchasing a home for the very first time, a lot is going to come at you very fast, right? Especially because, as I like to say, homeownership isn't one of those things that we're taught when we go to school, for example. And the only way you become experienced in it, unfortunately, is by going through it yourself. And so there'll be a lot of different terms. You know, the terminology is, if there was a word bank, if you will, it would be huge, because there are different people that you're going to meet in the process, different types of loan documentation, closing, loan application, etc., which our folks later are going to go through some of those items with you as well. But some of the folks that you'll meet along the way are on this list, but this is by far not a comprehensive list of the many, many people that you will run into. These individuals that are found on this slide are the ones that you're going to run into during your actual loan application. So when you decide to work with Hancock Whitney or another mortgage lender, these are the folks that you're going to meet at that institution. So one of them, and I love that the first bullet point on this slide says partners in lending, because your lender is your partner. You're both going to be going through this process together. Although your mortgage lender, for example, does many, many loans throughout the year, you are their one and only you. And your situation is very unique and individual to your situation in your household and family. So keep that in mind. And I'm saying that for a reason. It may get frustrating when you've answered a question for what feels like the fifth time. Well, you know what? You already asked me for those documents. Why am I sending that to you again? Please, by all means, try to have a bit of patience, because it is a daunting process, but in the end, the reward far outweighs those few months or weeks that you experience as you're walking your way toward homeownership. So, one of the people that you will meet and most likely spend the majority of your time with is going to be the mortgage loan originator. This is the individual who is really putting the deal together. They are helping you to make sound decisions on the types of loan program and product that you utilize, which is going to have associated interest rates as well as other terms that come with that particular product. They're going to help you to understand, start to finish, what to anticipate. Going to walk through each phase of the process with you. In the background is a very, very important individual whom you may not speak with as much, but this person is the mortgage loan processor. And what they're doing is working very, very hard to make sure all of the pieces and parts of your loan application are in. They're contacting individuals on your behalf, such as your employer, to make sure that the documents that the lender needs are found within your application. An appraiser is someone that you certainly will meet as you, well, excuse me, you won't meet them, you'll see their documents. So what the appraiser does is they go to the home and they provide a valuation of that particular home. And when they're evaluating it, they're looking at it not only based on the property itself, but they are also making that valuation based on other similarly situated properties to derive at the final figure that the lender uses in order to finally underwrite your loan. Which brings us to the next individual, the mortgage loan underwriter. This is the person that does the final evaluation of your loan file, making sure that all the I's are dotted and the T's are crossed, and that you indeed are definitely a file that is has the right character, capacity, and collateral to give final approval. And then there is the loan closer. This is someone whom you will never meet. The loan closer on the back end makes sure that that file has everything that is needed in order to get you to the closing table with the title company and to make sure that the deal is done. And of course, the very last person you will meet will be the staff of the title company that is closing your loan. These folks are very important. Without them, we cannot make a deal final. And so they make sure that everything has been done proper and in order, and that the transfer of properties from the previous owner to the new owner is complete. Next slide, please.
Well, I actually want to
Yes.
stop here for just a second to see if anybody has any questions about what she's reviewed now in terms of who is going to help with the mortgage process. The next thing that she'll go through are some common terms that you need to know and understand. My question is there one person that kind of helps hold your hand through the whole thing? Because you've named a whole
Yes.
lot of people, so that can be intimidating. That because you're right. I remember it me taking a long time for me to find a home. So then I would have to, like, after 30 days or 60 days, I have to do it all. Like, they're like, you need to give me your paycheck
Right.
stubs again. You're gonna have to go back. And I'm like, what?
Yes.
And then I just so and so that was that person. And
Yeah.
I think I want to say my realtor helped me just a little bit through it, that
Yes.
she was the one that prompted and said, this is what you're gonna to expect. So on the other side, the finance side,
Yes.
who do we expect to be our go-to?
Okay. So I'm gonna go off script, Angie.
Yeah, well, that's okay.
And let me just I should have said this. I used to teach homeownership many, many years ago.
Okay.
So Raina, we have a lot in common. So, and I'm sure she'll agree with me. There are a few people who are very important in this process. You named one, a realtor. I used to tell people that, if you're familiar with baseball, that is, that a realtor can be like your angel in the outfield, the person that really has a good view of the entire game. They know who's on which base, which balls are flying where, etc. They have a bird's eye view, if you will, of what's happening in the process. When you have a good realtor, they can help to move the needle in terms of getting you from one point to the other. But you need to have just as good of a relationship with that realtor as you do your mortgage loan originator. And so you sort of have the loan originator as your liaison to the institution that you're going through to get the loan.
Okay.
They are your eyes and ears through the process from that standpoint. The realtor is paying attention to the entire process, start to finish, even with negotiating with that seller. I tell people it is a misnomer that realtors are just there to help you find a house. Quite frankly, most of us find our homes on our own, especially nowadays with Realtor.com and all of these various websites that you can go to, and just plain old fashioned driving in the neighborhood, which is how I found my house.
Yep.
Um, that is not the most important thing they can do for you. The most important thing they can do for you is on that very front end and negotiating with the seller, because that sales contract is a contract. It is a legally binding document. And so you definitely need to have your own personal, I almost call them like a makeshift attorney. Really, they are, the good ones are, and they can help you navigate your way into making sure that the initial terms are what you're looking for before you even are sitting across from your banker signing off on your loan application. The other very, very, very important individual already spoke today, and that was Raina with Mid-City Redevelopment Authority. When you are buying a house for the first time, to my earlier point, because you've not encountered it before, there's going to be so many different things that, yes, it can get overwhelming, Angie. Having a good housing counselor at your disposal, if you will, someone that you can pick the phone up and ask questions of after having went through a homeownership training course is vital. So those are people that I believe are very, very essential as a part of your home ownership team, if you will.
Okay. And the last one, the other one I want to talk about here is the underwriter. Whenever they said they had to send it through the underwriter, my heart just started, beating fast. And I see this person being in a dark room going, no,
Right.
so, I mean,
What are they
if they're,
doing? Right.
just say that again.
Yeah, I would say it's like, what are they doing now? It's like, right,
Yes.
right. It's like, what are they
Yes, it's
uncovering?
like, oh, the underwriter has a question. I'm like, so but essentially they're going through it with a fine tooth comb, right? I mean, it is a business.
They
It is
are.
okay. And
And
so
again, when you've worked with a really good loan originator like the ones that'll be speaking to you guys shortly, they have walked you through just about everything. They
okay,
already know the sorts of questions that the underwriters are going to throw at the deal. And so they're helping you to provide the right amount of information to make that as smooth as possible.
okay, that's good to know. That's okay. Then let's get to the originators. Let's get to your next slide. Okay, here we go. Terms to know in the mortgage process.
So here's a few terms from that big word bank we talked about a moment ago. One of them, of course, is borrower. That is everyone on this call who is interested in purchasing a home. When you get to the point where you are sitting across from your originator or when you're online and going through your application process, that includes you and anyone else that is going to be borrowing towards that home. The creditor. So actually, your lender will eventually become your creditor. Other creditors include companies that you may have credit cards with, if you have any personal loans, your car company, etc. Those are your creditors. Interest rates. This is the cost of borrowing the money. And so, as I said earlier, there are certain ways in which your interest rate is derived. One of them, of course, does take into account your credit score, but also there are times when there are interest rates that are associated with certain types of products. It could be a special offer that an institution has to offer you. And so it's good to sort of talk through with your originator about various options based on your particular loan situation. And then, of course, the APR. So the APR, remember, being one of the most difficult concepts to understand when I first started learning about home ownership. And essentially, what it is a combination of not just your interest rate, but the other costs and fees that are associated with doing the deal at an annualized rate. Down payment. A down payment is basically your skin in the game. What are you going to be putting down towards your home? And this is outside of anything that is being offered to you by the institution or another entity, etc. This is pretty much your stake in the game. Private mortgage insurance. Private mortgage insurance is an insurance that is set up to protect the lender in case there is an issue and for whatever reason the borrower cannot continue to make payments against that mortgage. It is a way to help the lender with losses. And it is something that is a cost or a fee on the front end to some homeowners. Not everyone has private mortgage insurance, but I'll leave the originators to go into more detail about that. And then the closing costs. These are costs that are associated with pretty much every part of your real estate transaction. Any prepaids, points, taxes, and all of the insurances, the things that you will prepay to get things started, like your homeowner's insurance or flood insurance, et cetera, and other types of escrow payments. And then what is principal, interest, taxes, and insurance? Your PITI, this is your mortgage payment, the principal and interest. Combined, if you have a loan that has a combination, it's going to also be combined with a monthly charge for your hazard or homeowner's insurance, as well as real estate taxes. And then lastly, the escrow account. This is an account that is generally going to be held in our state. It's usually serviced by a separate servicer, not necessarily always the lender, especially if your loan is sold off. It's gonna be held with the servicer themselves. And that's all for the terms for now. That's a basic rundown of some terminology that you'll run into in your mortgage process. Up next, we're going to have one of our awesome loan originators. We have up next Miss DeAtro Carey, and she's going to go through the mortgage application process.
Thank you, Ashley, so much for providing that information. Now that we've reviewed the terms and who's who in the process, what I'm going to speak to you about is about the 3 phases of the process. And a lot of borrowers really don't understand the process and the terminology. The first process we will discuss is pre-qualification, conditional approval, and final approval. The pre-qualification is the information that you provide to the loan officer. You will provide an estimated numbers about your income, about your assets, and hopefully the information that you are providing is as accurate as possible. Because during this pre-qualification process, this process is not etched in stone, meaning you're not in a purchase contract. So this is just you trying to figure out where you fall in this game, where your qualification is, what you can and can't afford. I kind of like to go back to Ms. Winfield when she spoke on knowing what your true affordability is. In the pre-qualification process, I often explain to my borrowers, this is the opportunity not for someone to tell you what you can qualify for, but for you to actually know what you can afford. So during the pre-qualification process, before you get to the point to where you're in a contract, this is where you figure out what your family can afford, not what you pre-qualify for. So during this process, as much accurate information as you can provide to the loan officer to be able to help you navigate the process is very important. The next phase is the conditional approval. This is where you've been out, you've looked, your loan officer have given you a pre-qualification letter. And now you're out searching with your real estate agent on how much property you can afford. You're actually looking at the dollar amount. So whether that is 150 or 200,000, during this pre-qualification process, you have looked at all of the options of what you can afford, principal, interest, taxes, and insurance. How much house can you afford? So when you write this contract and you get into this conditional approval, it becomes a legal binding contract that you've entered into because you selected a property, you signed a purchase agreement, and now the underwriter or the processor will gather the documents that you provided to the loan officer, such as paycheck stubs, bank statements, W-2s, and 1040s, and the credit report that was pulled. All of that will be under a fine microscope. So during this time, the pre-approval, they will contact your employer to verify that you are employed, to verify that the paycheck stubs that you've provided are accurate. They will also send for what we call a VOE, a verification of employment, where again, what your paycheck stub states, that verification of employment, has to follow a loan. They will also contact the IRS to get what is called a 4506C, which is your transcript, to state the documentation that you provided to your loan officer in the pre-qualification process is accurate. They will also contact Social Security to make sure you are who you say you are, and your Social Security number and all of the other information provided is accurate. So doing this conditional approval, this is where everything you've provided to the loan officer in the beginning is now being verified. Once all of this information has been verified, it is then pushed to the underwriter to review the final approval. This is where the lender, again, has certified employment, income, credit, assets, in the appraisal report. And this is, again, where a lot of the borrowers don't understand that even though the borrower has done a home inspection, the final inspection that, excuse me, the final inspection is the appraisal for the lender. That appraiser is the lender's eyes to say the condition and the value of that property, and that have been completed. So once everything has been certified, the employment, the income, the credit, the asset, and the value and the condition of the property, this is where you come for your final approval, and where the underwriter gives the final approval and the closer and the title company starts to finalize all of the information. One thing I like to explain to my borrowers is, and I cannot speak for any other organization, but I know at Hancock Whitney, we do not give pre-approvals. We provide you with a pre-qualification. A pre-approval is when you've entered into a purchase contract and we're able to verify the sales price and qualify you based off of the property itself. If I don't have any questions, can we move to the next slide? Today, I will be reviewing with you 2 of the 5 key factors in determining a borrower's ability to obtain and repay a mortgage. The first part will be character. This is the application process. And I explain to my borrowers, this is the most important process, which goes on during the pre-qualification. That good information in, a smooth ride out. If information that's put in the system is not accurate and we get to the point where we're trying to get a pre-approval, it is going to be very bumpy and difficult, meaning constantly asking for repeated documents, or as I explained to my borrowers, I need documents when I provide to you, such as tax returns. I need to make sure that they are signed and dated all years. That's required. Again, as a loan officer, it is my job to tell your story. This is where this application process starts. All I'm providing to the underwriter and the investor is your story. They will never meet you, contact you. The only way they're able to understand who you are and your ability to afford this property is through this application process. And this is me allowing you to give me pertinent information to tell your story. For example, I often state in my classes, if a stranger walked up to you and asked you to borrow $250,000, give you their credit report and their paycheck stubs and say, yeah, I'll pay you back over 30 years. How would you feel about that? This application tells the process. So can I get you to move to the next slide, please? Okay, what you see on your screen is what a mortgage application will look like. In earlier last year, they changed the application, the purchase, the 1003. They changed it and they kind of mixed up some of the language. Again, they're going to go in and ask you for pertinent information like your name, social security number, date of birth, your employers, your bank statements, whether you have any investments. But one of the areas that I make sure that my borrowers stop and take the time to understand is the disclosure portion of it. One of the things that they have changed on this application is Section 6 of the application, which talks about your acknowledgement and agreements. I want to focus on this for a minute because I want my borrowers to understand this section tells you about your legal obligation when you sign the contract. One of the things that I've noticed that they've changed is they've stated that you agree and acknowledge and represent the following information you have provided to the lender and other loan participants, which may be a third party or a soft second subsidy partner that's lending you money, that all the information you have provided is accurate to the best of your knowledge. It also goes on to state that if there's anything in this loan application that change, it is your responsibility to update it. So you're stating this application is true and accurate and complete as of the date you signed it. But you also acknowledge that if anything changes, if any terms of conditions in the real estate sales contract or your employment changes, that you will reach out to your loan officer and change those things. Because there's another section in here, again, that I want to bring up, that they change. Any intentional or neglect misrepresentation of the information may result in civil penalty and criminal penalties. Again, I stopped there to make sure that I explain how important it is that the information that you are providing in this first phase is very important. As much information as you can provide, please provide. There's certain things, again, that will show up on the credit report that is a given, but there's other things such as judgments and child support liens and child support liens and any type of deferments that will not show up on the credit report. But when you get to the end of this process, it will show up through the title company. So again, when we're building your profile and looking at your character, the very first thing you need to make sure you do is feel comfortable in communicating with your loan officer and disclosing to them what's going on in your world. As far as, hey, I pay child support, or I have a judgment, it didn't show up on the credit report, or, oh, I am married, or I just got married and I don't want my spouse on the loan. If you communicate that to your loan officer up front, the process will be smoother, because there are certain products that we'll go through a little bit later in this session that will help you understand whether a conventional product is good for you or an FHA product. Okay, so again, the application is on here 6 pages, but if you have a co-borrower, it becomes 12 pages. It becomes a little bit lengthier. So what I want to ask that you take away from character is to understand the more detailed you are, so your loan officer can tell your story to the underwriter, the smoother the process will go. Do I have any questions on anything that I've reviewed? Okay.
I don't see any questions coming in.
All right. Do you have any questions, Miss Angie?
And you know what? So far, so good. I think I'm good on this one.
Okay.
Yeah.
All right. Capacity. So this next slide I'm going to talk about, capacity, is the process where the lender determines how much you can afford or you can borrow. And again, it goes back to me saying, I need to make sure my borrowers understand, we don't tell you how much you can afford. We explain to you how much you qualify for. You determine how much you can afford. So can I get to the next slide? All right. So during the mortgage process, in order for the underwriter or myself to determine how much you can afford, there's documents that will be gathered. And when we're talking about qualifying, let's focus on income. When we look at the applicant's income, you will either provide paycheck stubs or you're self-employed. Now, either way, let's talk about what income each one uses. When we're self-employed versus W-2 or salary, one will look at gross and one will look at net. So when your taxes are being taken out of your paycheck stub, we will qualify you based off of your gross income. That's before they take any taxes out. When you are self-employed, because there is no taxes taken out, and at some point, your business will have to pay part of what they bring in gross out in order to be able to keep the business afloat. They will use your net income. I'm going to stop here and say again, I'm just going to repeat. We do not determine how much you can afford as a lender. We determine how much you qualify for. So being that if you are waged, we qualify you off of your gross income. You need to make sure you understand that if your gross income states you make $3,000, but yet your net income, you take home, let's say $2,000, we're looking only at what's on your credit report. But we know life happens and we have medicine that we pay for. We have childcare that we pay for, and we have other family members that we help out, such as our children when they need us to help out. So keep in mind that when you qualifying and you are a waged earner, we look at your gross income. When you are self-employed, we look at your net after you pay all of your employees and all of your expenses. As we go through this, we're looking at the income and we say, okay, let's look at how they calculate the income. So for wage earners, they look again at paycheck stubs and W-2s. You have to have for both self-employed and wage, at least a 2-year employment history. Why do they need a 2-year employment history? Because some businesses are seasonal. So in order for us to figure out what your height of your business production or your income production will be, it may be in the summer. It may be around Christmas time. You make the majority of your money. It may be New Year's, the beginning of the year. That's why they're asking for a 2-year employment history so they can average it. So when we have wage earners that receive paycheck stubs and W-2s, but you're on commission, you receive tips or bonuses, it goes back to that 2-year rule, because as I ask my borrowers, if you're on commission, can you tell me whether you're going to make the same amount next month? 9 times out of 10, they can't. How much tips you're going to receive or what your bonus will receive. Normally bonuses are based off of yearly production or quarterly production. Tips are based off of, in some cases, if you're in the waitress, whether you do a good job or how your service. In commission, again, is how much you produce. Part-time, seasonal, and a second job also require a 2-year employment history. Again, all of this is about averaging your income over a 24-month to be able to project what you will earn. When you're self-employed, again, we look at our tax returns and we look at all schedules. I have the busiest part of my year for my self-employed borrowers, believe it or not, is November, December, and January, and February. Because at that time, they realize, oh, I want to buy a house. What should I file on my taxes? I explain to my borrowers, you need to get with a tax accountant. You need to explain to that tax accountant that you're in the process of purchasing a home. So you need to make sure that you understand what cash write-offs are versus paper write-offs, what amortization is versus depreciation, how your business will fold within that. And make sure that you are not, as a self-employed person, just focusing on, oh, I'm going to purchase a home for this year, so I'm going to show all of my income as if I am earning it. Reach out to a tax accountant and have them explain to you how that will affect you negatively or positively. But in the mortgage process, we look at and we average the last 2 years of wage earners, whether you are W-2, if you're a 1099, they also look at the last 2 years. I'm going to kind of delve a little bit deeper with my self-employed borrowers because I don't know whether I have any on here. But if you are self-employed, I explain to my borrowers, you need to understand that it's being self-employed. If your income is increasing, they will average it over 24 months. If your 2020 tax returns was 50,000 and your 2021 was 25,000, they're going to only calculate your income over 12 months looking at that 25,000 because your income is decreasing. They also ask you for a year-to-date profit and loss to be able to make sure if you're self-employed that your business is still viable, you're still earning income, and your business is not decreasing. Your income is not decreasing. Any additional income that we may look at is Social Security income, Social Security disability, and retirement. When we talk about Social Security income, we need the award letter, not the 1099 that you receive at the end of the year if you file taxes on it. The award letter is needed because on certain award letters, it will tell you whether the income will be stable, meaning if you receive $1,200 a month, but in some cases, if you've received too much or you have to pay Social Security back, they will tier how much you will receive in your Social Security monthly payment. Social Security disability. Again, it depends on the source of why you're receiving Social Security disability. The award letter will inform us whether the Social Security income, disability income will be recalculated once you are revisited or your medical situation is reviewed. For retirement as well, we also need a retirement award letter. In some cases, you have individuals that have retired from several companies, but have elected to receive maybe a certain portion, a larger portion for a shorter period of time because they know they have a secondary retirement. So in some cases, you may have an employer that may say, hey, you can retire and you can receive $1,500 for the next 10 years. After that, it drops down to $500 or it goes away altogether. They may elect to get more. That's why the retirement award letter is needed. If you're receiving child support, I explained to my borrowers, if you're receiving child support, it must be court ordered, and we have to have a 12-month history showing that that income will continue. Also for child support, if that child is 16 and they will not be receiving that child support for the next 3 years, it cannot be included. But for me, the most important part of calculating child support is making sure that it is court ordered, because it has to be court ordered. It doesn't necessarily have to go through the state of Louisiana, but you would have to show 12 months of consecutive payments over that 12-month period. So I have gone through the types of qualifying income and what is expected. Do I have any questions?
No questions have come in. Please make sure that you're using the chat or the question. And this is some good information. Basically, when there's no questions, that means you're very thorough. I have one.
Yes.
Where in the process do you fill out the application? So like when you're buying a car, for example, you can call your bank and say, I'd like to buy a car, and then they'll walk you through some questions, like how much would you like to spend per month, and so what would you like your car note to be? And so I think that's you answered it with between the pre-approval and pre-qualification. Yeah. And I just want to drive that home. So you call and they say, okay, well, this is how much car you can buy. So you do it that way, or you go pick out the car and then you work with the dealership, and then they can either finance it or they'll send you off. So it may not be apples to apples, but you know, you when you're picking out the car and the dealership is helping, you don't fill out the application until it's all done. You know, so like where in the process do you fill out that application?
So in the environment that we're in with realtors having multiple offers, a realtor will not take you out until you have received a pre-qualification letter. Now, earlier I mentioned that I can't speak for any other organization, but I do know Hancock Whitney does not do pre-approvals. We do pre-qualifications. So ideally, the way it should work is the borrower should attend a home buyer training class to get their certificate to kind of understand the process and who's in the process. That nonprofit organization, HUD approved, will refer them over to whatever participating or give them a list of several participating lenders that's in their area. At that point, that borrower will contact myself or my coworker, Mindy Denicola, who also serves the Baton Rouge area. And we will go in and do what is called a pre-qualification. They will either provide us the documentation verbally. I do always encourage that they send in documents such as paycheck stubs, bank statements, W-2s, all that information to make sure that the information we're providing them, the pre-qualification letter is worth the paper is written on. So that's kind of where that process starts. You either go from a nonprofit organization, or again, if your realtor is the one that is referring you, most seasoned realtors in this environment will not take a borrower out without having a pre-qualification letter.
Yeah.
So that's, kind of how where it starts. I do see a question. If I have a client with no credit cards or other outside commitments than her rent, I have advised her to get a reasonable credit card and to use it very sparingly. She agreed. Her credit score is about 680. Anything you think I should advise her on? Okay. So this is where I kind of refer to the nonprofit organization, the housing agency, to be able to go in and look at where that borrower is, as far as where they start out with their credit. Now, you have nonprofits versus lenders. We look at it very differently. I will never tell a person pay off collection accounts. I will never tell a person to pay off medical bills, because the way our investors look at it is very differently. Okay, awesome. The way our underwriters look at it is very differently. Again, we always refer any credit decisions to go through the process and let the underwriter come back and make the determination. But as a credit counseling agency, I would basically say you guys are the experts on how to assist a borrower in the beginning process of increasing their credit scores. So can I get to the next? All right. So this is the mortgage affordability, qualifying ratios. One thing I can say is, in the beginning, the counseling agency spoke on the different mortgage products such as RD, Rural Development, FHA, conventional, and VA. Each of those mortgage products have different qualifying ratios, but today what I'm going to briefly go over with you is just kind of a basic one. So our housing ratio, the housing ratio is what percent of your gross monthly income you can use to qualify you for your principal, interest, taxes, and insurance. This industry is very heavy in acronyms, so we will call it PITI, what you could qualify in principal, interest, taxes, and insurance. So in this example, it talks about most programs may allow your housing ratio to go up to 30%. So $2,500 of your gross monthly income, they will use 30% of it. That is estimate of $750. On your debt to income ratio, most of the loans may allow you to do 43% of your gross monthly income. So that 43% of your gross monthly income will include your principal, interest, taxes, insurance. It also will look at student loans. It will look at car loans, regular installment loans, credit cards. Again, and this is where being able to communicate to your loan officer and make sure that they understand that you need to disclose you pay child support. You need to disclose if you're paying the IRS a payment monthly. All of this, even though it may not show up on the credit report, it will show up once you get to almost the end of the process with the title company, who's going to come back and say, oh yeah, either this person pays child support because it's showing up in some type of court order, or this person is repaying the IRS back X amount of dollars. So the more information you provide up front, they'll be able to identify what the payment is as far as your total estimate. again, the example is based on the loan amount for approximately $140,000. And again, it may vary. The scenario may vary, again, depends on what the interest rate is. What's the, what's the interest rate? Gosh, we don't want to talk about interest rate these days because they're so volatile. But the total monthly payment with your debt cannot exceed $1,075. In this case, what happens if your debt is larger or your total amount is larger than $1,075? So that pretty much tells me that you only have $325 of debt that borrow can occur. So what happens when that borrow go to 350? Well, it starts to eat into your housing ratio. So now it starts to look like you can afford less house than that estimated 140,000 that you're looking for. So what I want to make sure that you guys take from this is your housing ratio and your debt to income ratio is based off of a certain percentage of your gross monthly income. The higher your monthly debt is, the less you can qualify for in a home. So again, it is very important that you, instead of just jumping into it, if you have the opportunity, get with a HUD approved nonprofit organization to help you through the process. So when you get to your loan officer, you'll be a little bit more sure of where you need to start. This is why these sessions that we're providing is so important. So going in, you have some information and you feel more in control of what you need to do and where you need to be at in home ownership and purchasing a home. So do I have any questions? I don't know. Do I have any other slides? Hopefully, I provided enough information in this session that we focused on the first two portions, which is the first two portions of the 5 steps to be able to provide you with information on how to get the process started.
Okay. I think that was amazing information. I love this part of it, this qualifying ratios as well. I do have one clarifying question about the self-employment. There are some entrepreneurs on the call. And I think that a lot of people think that they can't own a home, you know, and unless they're employed and show those paychecks and things like that.
Right.
Can you speak to that one more time and clarify, being, you know, if you are self-employed?
So again, if you're self-employed, and let me just kind of, I'm going to focus in on kind of what really happens, give you an example. Most of my self-employed borrowers decide, because maybe of a life-changing situation, they're being put out their rental property or rent has just become exorbitant. At that time, they're like, I want to purchase a home. But for the past couple of years on their tax returns, when we look at what their net income is, it has resulted into zero income or negative income. So I explain to my borrowers, you need to plan. If you decide that you want to purchase a home and you know your business have not been profiting or you've been reporting to the IRS that you have a lot of write-offs, make sure you get with an accountant, a certified CPA, and go over your tax returns and go over your information to see where you can have what is called paper losses versus cash loss. Paper losses such as mileage or amortization or depreciation, things that even though you write it off, it can be added back to your income. Things such as, oh, I had to buy tires for my car, or I had to buy a new car, and you write that off, that's cash write-off. So that affects your bottom line when you're getting ready to be qualified for a mortgage loan. A lot of my borrowers also are in a self-employed borrowers are in a bad situation because they go in and they show all of this income, but they have not paid there are taxes on it. So not only are you showing income, but now you put yourself in a financial liability where you have to pay the IRS back, and that's being added to your debt to income ratios. So what I can say is just make sure as a self-employed borrower that you have a very good CPA to be able to walk you through the process of how to show your business is earning income, your true earning, your true net income, versus writing everything off without having, and I don't want to accuse anyone of anything, without having to pay the IRS back. Most self-employed borrowers are under the impression, if I make $100,000, I can write off 99,000 and just show 1,000. Well, that's fine that you don't have to pay the IRS back, but when you come to not just purchase your home, but to build your business, no one will give you any money. A lot of the borrowers have come to me that have tried to do SBA loans, and they tried to figure out why SBA denied them. Well, when you look at your bottom line, you negative $45,000 on your business, but I make more than that. Well, when you're self-employed, you have to show income. And I do encourage, I am not a tax accountant. Again, I'm gonna refer you over to your CPA, but I do want you to understand, please do not go in and amend your taxes just to show income, because that will show a red flag and you will be audited in most cases for the next 5 years.
Oh my gosh.
So again,
and that's why this is such a great program, so you can introduce people into this terminology and to let them know, what to expect. I think that's great advice. Ask a CPA. So
again, right, as I stated, I am not a tax advisor. Please
right.
see your CPA or your advisor. I'm just giving you kind of an example of what kind of comes across for the self-employed borrowers, so they don't feel as if it's a hopeless situation. You just need to make sure that you plan. And in most cases, most self-employed borrowers need to plan 2 to 3 years in advance that they want to move forward with purchasing a home if they're writing all of their income off.
So if all the panelists would come back on, so we can, make sure that as we close this out with Ms. Carey, bring it up the rear. That was awesome. Thank you. If there's anything else that you think we haven't touched on, or that in the ABCs of home buying, that we want to, I know that there's things that we wanted to accomplish today, but if you just want to give some more color around any one of the topics that have been brought up today. I don't see any questions. So what I heard like over and over again was get with a home buying counselor.
Right.
And that's Miss Raina. And did I hear you say that you get an actual some type of certificate?
Yeah, you get a HUD approved housing counseling. Well, you get a certificate saying that you went through a HUD approved home buyers class.
Excellent.
So,
and that gives you that gives you a little,
that gives you a little clout for, like, if you want to get down payment assistance with the, the state of Louisiana or all other kind of down payment assistance, they want you to go through those first time home buyer classes, and they want it to be HUD approved.
Right. Okay.
So
Gotcha.
Yes, ma'am.
Well, I mean, I applaud all of y'all. I mean, this is really, I as y'all were talking, I'm texting all kinds of people saying you really need to get on here. My son's 28. I think he's ready. That's nothing. I don't think it's age. I see a lot of people buying homes as they're younger. It's a great investment, long term, like we talked about, and something that by the time he's my age, it'll be paid off. And then they don't have no mortgage, and going into his retirement. So, I mean, younger than that, honestly, if he gets a 15 or 30. Okay. So at any rate, I want to thank all of y'all for being here today. I think it was a wonderful panel. I'm looking forward to the next portion of the series. Please, and again, make sure that you're watching whatever channels that you learned about this particular part 1, so you can keep up with part 2 and 3. Ms. LaCarsha, you want to close this out?
Sure, absolutely. That's great. First of all, I want to say special thanks to you, Angie, Legacy Business League. You always do over the top facilitating our events for us. So thank you so much. Special thanks to Mid-City Redevelopment Alliance. Great presentation. Thanks to Ashley. had to jump off. She had to go and have a minor emergency there. So thank you, Ashley and Beatro, our very own, for your expertise. And I just want to say that we have some mortgage lenders as well as some community lenders that are on the line. They've joined us. And as you can see, they've placed their information in the chat box for us. So if you have any questions and you're in their market, feel free to reach out to them as well. But I do want to say, most of all, thank you to all of our participants, our attendees. Without you being on the line, we wouldn't have anyone that we can share these expertise to. So thank you all so much. And I heard something you said, Angie, and it really did, make me start thinking. You asked the question, who can you depend on to walk you through the process? And then I started thinking, when you know you have someone that you can depend on to walk you through the process, you do feel less anxious, you do feel less overwhelmed. And when you know that they're there for you, it makes going through the process so much more enjoyable. Yeah. So that's our goal here at Hancock Whitney Bank, is to help you walk you through that process. So thank you all so much for joining again. Don't forget to join us again in May. As Angie mentioned, we're going to be talking about credit management, budgeting, as well as financial health. And then we'll conclude during the month of June. Our lenders will take a deeper dive on the down payment and closing cost opportunities that we offer here at Hancock Whitney Bank. And they'll also give you some information on special programs and opportunities that are offered. Again, thank you so much for your time. We appreciate you. And Angie, I'll see you tomorrow and Thursday.
That's right. And so if anybody, that you think would benefit from this particular series, again, we're having it tomorrow in Gulfport, and we're having it Thursday in Tampa. And so you'll be able to get some of the same information. Obviously, you won't have a local connection like Ms. Raina, but please tell folks about that, and they can register at imlegacy.org. imlegacy.org. All right. Well, thank you so much. Y'all have a good night.
Thank you. Enjoy the rest of your day. Thank you so much, everybody.
Bye-bye.
Bye-bye.